everyone, and welcome to our webinar, Various Ways to Invest in Real Estate. What are the risks and returns? I'm Sue McKittrick. I'm Senior Strategy Officer at Alta West Capital. I'm delighted to be your host today. Joining me are Charles McKittrick, Chairman of the Board at Alta West. Hi, Charles. And George Botros, CEO of Alta West Capital. Hi, George.
Hello, everybody.
Hello, hello.
Charles,
great to be here.
Thanks for being here. This is great. Charles McKittrick is currently chairman of the board. He's been chairman of Alta West Capital since April of 2021. He brings over 30 years of leadership and lending experience to Alta West. He was CEO previous to being chairman of the board from 2011 to 2021. He is also a director of the funds that Alta West administers. George Botros is currently CEO of Alta West. He's been CEO since April of 2021. Previous to that, he was CFO and CCO. He brings over 20 years of lending and business experience, and he is also a director of the funds that Alta West administers. Before we jump in, I just want to do a brief overview of what Alta West Capital does. We are an alternative lender specializing in residential real estate. We've been in business for over 32 years. We are very proud of that. We're also proud of the fact that we help Canadians both on the borrower side and on the investor side. Before we jump in, I just want to say too that what we are talking about today is intended to be just information. It is not intended to be advice for your particular circumstance. And if you would like more info on the funds that Alta West administers, you can find us at awcapital.ca. Before we get into our talk on why investing in real estate, would either of you like to make a comment before we start?
Yeah, please, Sue. First of all, thank you very much for having us here. This is a great little way for us to tell the story of Alta West, and that's the most important thing we want to say right now is that we really are, and just to build on Sue's comments, our goal is to help Canadians.
Yes.
We know right now that the financial landscape out there is very rocky. We understand that getting approved for a mortgage is not that easy. We're here to help Canadians. We're here to help Canadians go into homes. And at the same time, we're also here to help Canadians with their fixed income products. It's not a cliche. We actually live it here. We're proud of it. We've been doing it for 32 years. We hope to do it for another 100 years after this. And we've been doing it with great investors, and we've been doing it with great borrowers. And we're just privileged, and we're blessed to be in this position. So with that, I'll turn it back to Sue. Thanks for listening to us.
Well said, George.
Thank you.
Thank you so much for that. And it's true, you know, real estate is a wonderful way to create wealth, whether you are investing in your own home, perhaps it's a rental property. Today, we want to shine a spotlight on mortgage investment corporations and how it is a compelling asset class for people. It is what we consider to be a fixed income asset class, and we want to be the fixed income portion of our investors' portfolio. We don't want the whole thing. We just want to be the fixed income portion. So
the best performing.
Best performing, absolutely. We have, as we mentioned, an excellent track record, and we will get into more specifics of that. George, would you like to start us off with why invest in real estate?
For sure. I think there's, you know, I think one of the tenets of financial management or financial portfolio management is to have diversification across many assets. One of the greatest assets that, you know, has created a lot of wealth in Canada over the last few years is real estate. It's not tied into the public markets. It's a different volatility than the public markets provide. It's a great way to, you know, get income as well. The income stream that's generated, whether it's from a mortgage investment corporation, a real estate investment trust, whatever it is, rent, interest payments, that's a great way to diversify your portfolio. And it's the hallmark of, quite frankly, it's been the hallmark of Canadian investing for many, many years.
Right.
Yes, absolutely. You made some excellent points, and I feel that we at Alta West have a great story to tell for for many reasons, but that we've been in business for 32 years. We've never had a negative return on our funds, and we help Canadians. Chuck, would you like to walk us through the types of real estate investments that exist out there today?
Well, that's such a broad landscape, and depending
True.
on whether you're 20 or 70, people in Canada can invest in real estate in a myriad of ways. In fact, we came into real estate from the health sector, and it offered a different way to diversify our own portfolios and our own income. And
True.
so, whether you are purchasing a property for rental or commercial, you want to be a commercial property for leasing, that you're owning the property. You can purchase the debt, like be an owner of a mortgage or in a fund, like what we're doing. You
Mhm.
can you can be a property manager. Your profession can revolve around real estate, like a realtor or an appraiser or a mortgage associate. So there's many different ways. We're not even talking about construction or development or any other things that are all part of the very broad landscape of Canadian real estate scape. And it's a wonderful sector of Canada's economy. It drives so much of our GDP, and it is life changing for a lot of people. And we want our fund to be that for our investors, that it is part of their financial well being.
So true. It is a very unique asset class, but it is a steady return for the investor, and we're helping borrowers get into homes. So thank you so much for that. George, let's focus now a little bit on mortgage investment corporations. Can you just talk our audience through what a MIC is?
For sure. We use that example all the time around the offices, is that the Mortgage Investment Corporation is like a miniature bank. We have
Right.
investors on one side that invest capital. We have borrowers on the other side that borrow the money. And we, Alta West Capital, are in the middle as the manager, um, getting the two parties together in a
Yeah.
fair and equitable manner. We try to loan to people we do loan to people that are predominantly self-employed, that do fall out of the basket of the regular financial institutions or the Schedule I banks on prime lending. And we do try to offer a higher rate of return on our fixed income products that the investors
Mhm.
have. And we marry the two together for the benefit of both parties.
That's right.
Yes. Chuck, would you like to add perhaps some of the benefits of investing in a MIC?
Okay, love to. Now, they've kind of been already said, so I'm going to kind of encapsulate it. That we have a number of mortgages spread across the country from Ontario to through BC, and so over 1,000. And so your risk is diversified across all those different properties, and so you get a wonderful security in knowing that not one thing in the portfolio will radically affect it. So it's very steady. The second thing is it provides consistent income. All those borrowers making their payments every month, it those borrower payments go into the fund and it's dispersed to the investor. So there's a steadfast of it, a steadfast quality of it. There's lower volatility because the deals within the MIC, they turn over all the time. New ones are coming in, and others are leaving us. And so, but it's not they're all coming in or going out at the same time. So there's less of a volatility in the yield to the investor, and we can show that over time. Is that this is just a very steady income producing product for the investor. And then, for a lot of people, the professionalism of our group, of our management, second to none.
Yeah.
And that is very attractive because they know that we're adherent to all federal, provincial, and municipal regulatory bodies, that we have a third-party board that ensures that we are following our own guidelines, and they're critiquing how we're doing things on our professional management. We have a number of our own staff that are well educated, and we have a seniority of experience that I think is really second to none in the industry. And as a result, we have created this wonderful product. So
That's
I'm very confident that what we offer to the investor public is what they're looking for in a fixed income product.
Thank you so much. You're so right. The professionally managed funds the is paramount to our success. We have a very strong underwriting team who looks at each borrower and each deal on a unique basis. We're able to evaluate borrowers on a case by case basis. And I think it's worth noting too that the types of borrowers that we have has changed so much over the last several years. We have a lot of um, professionals who fall outside of the traditional big bank mortgage financing that come to us. So the strength of our borrower is has changed a lot over the 32 years that we've been in business. George, can you take us through how does an investor get paid from a MIC?
The investor gets paid very similarly, just like the example that I was saying earlier is that we're a miniature bank. We get paid, the investor gets paid off of the interest payments that the borrower actually makes on a monthly basis. So the pool, for example, Diversified, that has 964 deals, we take those mortgages and we've pooled all that income. We get the money in on the first of the month, pull it up, and we distribute the income prior to the end of the month. It's a flow through.
And they're eligible for TFSAs, registered
Absolutely.
accounts. They can
Yeah.
do it in their personal name. They could do it in a corporation, depending on what the investor's needs are. Thank you so much for that. When considering investing in a MIC, what are some key factors that investors should consider, Chuck?
This is another very diverse question,
Very
and
broad.
you guys feel free to jump in, because there's a number of significant factors that the investor should consider. Is things like, what is the type of security that MIC is going after?
Mhm.
So is
Sure.
it a residential house? Is it an apartment building? Is it a commercial building? Are they first mortgages or second mortgages? What is the covenant? What does the borrower look like? What are they happy to do? When I started years ago, there was a lot of different entities out there, and some of them were, they would be lending on a variety of different things, very high risk, whether it was rural or the type of property, and the volatility that ensues from that. We aren't willing to go there anymore,
Right.
or at all. And so we have chosen, in our case, urban residential mortgage properties, because it's very easy to determine their actual value, and they're not difficult to unwind if you need them out of the portfolio.
Mhm.
So that is an important one. You're looking, another one that George always brings up, which I absolutely agree with, is historic returns. What's the track
Yeah.
record of that MIC? Is it volatile? Are they up and down? Is it steady? Are they above market, below market? Why? What are they doing? Management team, and it's all kind of tied to the return. What is their management team? They have a lot of experience. Are they centric to one area? Is their experience fall in one subset, but not the entire breadth of what their product is doing? Management fees,
Yeah.
another one. How is that MIC operator getting paid, and on what? We're very clear that Alta West Capital only gets paid on the share capital, not on
Yes.
any leveraged amount. That's all for the investor's benefit. And I think that brings a lot for the investor, knowing that Alta West Capital only is getting compensated on the share capital that's in
Right.
the fund. It's a
Yeah.
very
That is
organic thing, a MIC. You have to find the deal, underwrite the deal, fund the deal, administer the deal, and then end the deal. So there's a lot of moving parts to it, and just the operating style of that operator is a big deal as well.
Yeah, that's true.
You
And
guys, have I missed anything?
I
I,
don't think I don't think you've missed anything, but I think I would absolutely underline the importance of the underlying security. We
yes.
we see a lot of times people come to us and say, "Oh, how come this mortgage investment corporation is generating higher rates of returns than you guys?" Look at
Mhm.
what they're lending against. Please make sure you look at that, and look at the track record. We've been around for 32 years. We've seen so many different market cycles. You know, somebody that's just started out a year or two and it's only been in high a market that's just been rising all over. You don't know. We've got a track record of our collection and
That's
foreclosure
right.
in-house.
Yes.
That's a very, very big thing.
That's
But
right.
please think about think
Transparency.
about think
Yes.
about what you're lending against. That's a big one.
That's so true. And we primarily focus on urban markets, larger centers from Ontario to BC. Um, it might be interesting for our listeners for us to walk them through. We're all looking at deals. I know Chuck and George, you're both a part of the underwriting team. Would either of you like to give an example of a deal you've seen recently, just to give our listeners some insight into who we're lending to and the security that we're lending on?
Yeah, actually, that's a great question. And I'll even preface that question with a little bit of commentary. We see almost $1 billion worth of deals a year.
Yeah.
Like that's how many dollars are coming in and asking for financing. And we're so particular about the deals that we fund. We'll fund anywhere between 20 to 25% of the submissions that we see. So right off the bat,
Yeah.
look at all the deals that we're not funding.
Right.
The very, very typical deal that we fund, honestly, is a borrower that has trouble showing the income the way the bank wants. The
Right.
3 years notice of assessments, the 3 years of T1
Right.
generals, so on and so forth as far as the bank wants. Our average deal will probably be a house in an urban area, whether it's a Calgary, Mississauga,
Yeah.
Berkeley, where that person is putting anywhere
Oakville. Yep.
Oakville, and that person is putting anywhere between 25 to 30% down payment, and he's probably just a little bit, just falls outside of that lending parameter that the Schedule One Prime A lender has.
Yeah, that's
Yeah.
right.
I should say.
Yeah.
Whether an
That's
entrepreneur or they're new to Canada,
Absolutely.
you're right, George, it is the income, but the underlying security, the house, the neighborhood, the community that it's in is all very important to us.
Yes,
And as well as the borrower, but then we're
for
just
sure.
able
Yeah.
to provide something that the banks can't.
I would add, sorry, Sue, just 1 second. I would really add, quite honestly, the differentiation between the prime borrower, like our borrower going to the Schedule One bank and coming to us, we both have good credit. Both
Yes.
borrowers have good credit. We're both lending against the same types of properties in the same urban areas. A lot of it is the same. It is, how is that person qualifying? And the banks are making it so tough to qualify these days. And
That's
that's
right.
where we come in to help Canadians.
Yes. Yeah. Excellent. You both made excellent points. It made me think too. Could you talk a little bit, Chuck, about the average house price that we lend on, and also loan to value? We haven't really touched on loan to value.
Both good too, because they are quite unique again. If you think that the house value in Greater Toronto and the house value in Victoria, no, Victoria's maybe not good, but Edmonton are going
Yeah.
to be radically different.
Right.
And so we have limits on on what the loan size and the actual valuation of the house can
Yes.
be in either community different, because it affords a different liquidity than we're doing. And the average loan to value, which is how much loan against how much value. So if it's a $1 million home and we're lending $650,000, then the loan to value is 65%. So In Alta West case, the last 6 to 12 months, our loan to value has come down to, it's down to about 68% now, isn't it, George?
Right.
Like it's incredible. So back to that $1 million home that's in the Greater Toronto area, that then the borrower client is coming in with $320,000, and we have a $680,000 loan. And there's an assurance to our investors that that borrower will not walk away from that much money. And that provides a real and tangible understanding that the borrower wants to make their payments and is not wishing for trouble. They want to keep their home.
Yes, that's very true. And we will always work with a borrower as long as borrowers are communicating with us and telling us, we all know life happens, but as long as a borrower is communicating, we are willing. Our default team is working with them. So that's important for investors to know as well.
So the lending loan to values, though, it changes place to place just as much, more in some urban areas and less in others. But typically we'll go as high as 75%, 80% in some areas, and lower in other areas, maybe due to population or style of home.
Okay, thank you. Thank you for that. Before we wrap up, do either of you have any other comments that you would like to share about why invest in a mortgage investment corporation?
I'll take this, George. I can say very clearly over all these years that I've been in it, and then the blessing of having all these other investors talk about how it has changed your life, is that when you have a good performing fixed income product that spits out cash on, in our case, a monthly, not even quarterly, but on a monthly basis, it radically changes your investment outlook. You're getting a dividend, and it changes from month to month, but you're realizing a cash in hand dividend on a monthly basis, and that can help you realize your financial dreams. And it has been a wonderful thing for many people associated with Alta West Capital.
Thank you so much for that. George, do you have anything you'd like to add?
No, I think I reiterate all of Charles' comments. I would just state that, we want to be part of that fixed income part of your portfolio.
That's right.
Really investing in a mortgage investment corporation, especially one that does monthly distributions, does provide that income producing product that many people need. And as an individual gets older and their horizon for investments gets a little bit, they require that cash, we would love to be able to provide you with that cash solution.
Absolutely. And as we've reviewed today, there are many ways for investors to invest in real estate, and we are encouraging you to look at a mortgage investment corporation. We professionally manage, diverse across many urban centers. We've been in business for 32 years. We help Canadians both on the borrower side and on the investor side. And it really is a privilege to be able to do that. So thank you so much, guys, for joining. If you would like to know more about the funds that Alta West Capital administers, please look us up at awcapital.ca, and our wonderful investor relations team would be more than happy to talk with you. Thanks for joining us today, guys. Have a great day.
Thank you.
Thank you very much, everybody.